Volatility continuing to plague the markets as investors worry about the conflict in Ukraine, inflation, and rates. But our next guest says that two investment themes, which she outlines in her recent outlook, remain valid. And joining us now is Goldman Mossavar-Rahmani, head of the investment strategy group at Goldman Sachs. She is also Goldman's chief investment officer for consumer and wealth management. Just on a scale of 1 to 10, Charmin, for as long as I can remember, uncertainty has always been something that plagues the markets. What's the level of uncertainty right now? Is it much worse than we've seen in prior years, or is this just part of the job every day?
Uncertainty is certainly a part of the job at all times. And we've just come off a huge period of uncertainty with COVID and the pandemic. So we tend to use history as a useful guide in terms of how to think about such shocks. So right now, if we think about geopolitical shocks, we've had many over the last several decades. So if you think about September 11, if you think about the Iraqi invasion of Kuwait, if you think about the Iranian Revolution and the Iran-Iraq War, we need to look at what happened to markets at that time and what were the downdrafts and what's similar and what's different. So right now, what's similar, for example, if you think about the Iranian Revolution and the Iran-Iraq War, and it ties into what you were discussing earlier about what happens if 7 million barrels of oil are withdrawn from the market, either because U.S. and Europe put sanctions on the exports or Russia chooses to withhold some of that oil shipments. And in a case like that, one has to look at, in fact, the Iranian Revolution and the Iran-Iraq War, because exactly 10% of oil production was withdrawn from the markets. And when we look at what happened to the markets at that time, and oil prices increased quite significantly, equity markets typically in these geopolitical downdrafts have decreased around mid-teens, so 15, 16%. September 11, the market was down from high to low, about 11, but you may remember it was closed, so Europe was down about 16, 17%. So when we think about these types of experiences and we think about where VIX volatility has peaked around 37, 38%, it's nothing like what we saw during the global financial crisis at over 80, or what we saw during the pandemic in March at around also 80, even over 80. So if we're around 37, 38, you would say if the peak we've seen is 10, we're probably at 5 right now.
Interesting. So have we already done 17, 18%? Can we count the NASDAQ, or do we need the S&P? Are we already there?
We like to use the S&P. So year to date, the S&P is down about 10%. Plus or minus, and the peak to trough drop has been around 15%. Typically, we tell our clients that that kind of volatility when we're at current valuations is quite normal. One experiences a 10% downdraft about 80% of the time. So clearly, with all the Ukraine-Russia crisis and the uncertainty of whether it escalates, justifies this kind of move in our perspective. We recommend clients not try to trade it. If you have days where the market has moved up or down 4%, trying to trade it doesn't make sense. We're recommending clients rebalance their portfolios. We recommend looking at some value sectors like the energy sector. We have a tactical allocation to that for our clients. We like banks, for example, in the Eurozone. They have lagged over the last decade or so, and they got hit pretty badly from the crisis. But in fact, we think that there's huge upside. They don't have that much exposure to Russia. And so those are two sectors that we actually recommend to clients. Option strategies are pretty interesting in this environment with volatility so high. So there are other things to do rather than try to trade the S&P 500 in and out in this environment.